What is up, AUSers? Alright, so I want to talk a little bit about some levels. This is going to be a video focused on levels of stocks or ETFs and how they can be used for your benefit. Really, I think this is one of the most key fundamentals to day trading and even like swing trading and stock trading in general, but especially day trading. I mean, if you learn one thing, in my opinion, it's understanding critical levels, high of day, low of day, and a few other things. But like literally, you can take away all these fancy lines, the VWAP. I mean, some people get anxiety when they see them; they don't understand exactly what's going on sometimes. Get rid of all these lines. Just have this price action, and if you put down maybe just a few critical levels, not even that, like one or two, maybe three, coming into a day, I mean, you can make a killing. I mean, it'll really tell you where the stock's going sometimes, and it's very beneficial to use. And I'm going to talk about that today. So this is the SPY. It's an ETF. It's basically this S&P 500 trade on the New York Stock Exchange, and this thing tells you where the market's going to go. You can trade it against other stocks and kind of judge where they're going to go. But we're just going to talk about the SPY today. And some really interesting things happened, but this happens all the time. But it just so happened that it worked out pretty damn perfectly. So what you need to mark on your chart and kind of understand are lows of the post market, so after market of the previous day, maybe lows of the pre-market, and definitely highs of the pre-market. And those things can tell you an abundance about where a stock's going to go and what you should do at what price actions. All right, 264.20. Watch this. 264.20. 264.20. Okay. See that? Those two, the resistance on the previous day was, or support on the previous day was today's resistance. Okay, so you can see it right here. These are the highs of the pre-market. So stocks trading, right? You could have taken it short, would have got stopped out, small loss, no big deal. You could have held. Personally, I would have gotten out on this wick right here probably, just because of how powerful it was and that it broke this high. But then this thing tumbled, and when you see a tumble like this, then you should be short bias and be waiting for a position. You could have shorted it into the VWAP, but this might have scared you off. But for sure, I mean, a dead nuts. I mean, this is the trade take, high of day. I mean, damn, yeah, for like 1 penny off, maybe, if that. This thing touched the high of day and pulled back, and as soon as it pulls back, short that sucker. And if you're not trading this, then short Netflix, Facebook, whatever that's trading generally with the trend of the market. That's an amazing strategy. And then I'm going to show you guys bottom, so low of day of the post market of the previous day. Obviously, support is a good V bounce, not a VWAP, V bounce. When you see these really strong V patterns, that's a really strong indication of support or resistance if you go the other way around. So you should have that marked. I had that marked. And here's a perfect entry right here on the SPY. I mean, this washout, when it comes down like this of steep price action, and it touches that and comes back up. Just remember, what comes down easy can easily come back up just easily. All right, and so that would have been a buy right there. I mean, risking off of what? Low of day? I mean, that's just a few cents, not much. Amazing plays. And I mean, if you play the options on this, you could be making a killing by doing that. And then you can see right here, double tops, levels. So when you see this stock come up, and the ETF come up here, and then pull back, and then retracements, whenever it comes back up, you should be looking to this high of day. And literally take it short. Set a limit order right there. Just below those highs, maybe right here. So that when it comes to hit your limit order, you're short. And then set a stop right above this 260, right here, hold number, 264. It's perfect. 264.03, something like that. Set a stop. It's one of the lowest risk trades you can ever fucking take. I mean, levels are key. Levels are key when trading these stocks, and I don't care what you say. It's a credible stock will trade at levels, and it'll always make you money in the long run. And I hope you guys hear this. I hope you guys understand this. If you guys have any questions, please hit me up. We're always here to help you, and just remember, levels are key. Thank you very much. I'll have more video content coming.